Today, we will be talking about SanDisk, a company that has played a leading role in the data storage space for decades, from the well-known memory cards and USB flash drives to the most advanced SSD solutions that power data centers and large organizations. In the era of the explosive development of artificial intelligence and the ever-increasing need for data storage and management, SanDisk is at a critical crossroads. On the one hand, it benefits from high demand, but on the other hand, it faces significant challenges in terms of profitability. Stay tuned until the end of the video and you won't regret it. Here we go. Let's start with the image of the company itself. SanDisk has built its presence around NAND flash technology, which is the basis of almost all modern storage systems. This is a technology that is found everywhere, in mobile phones, laptops, servers, and of course in large data centers that support platforms such as cloud computing and artificial intelligence applications. The growth of these markets means that SanDisk is in a promising area with high growth potential. However, an analysis of the financial data shows a more complicated picture. Despite the fact that the company's revenue exceeded $7 billion last year, SanDisk recorded net losses exceeding $1.5 billion. In other words, the company sells a lot of products and has a growing turnover, but is struggling to convert this growth into net profitability. Net profit margin indicators are negative, while free cash flow remains negative, which means that the company consumes more cash than it produces. However, it is worth emphasizing that gross profit margins are improving significantly. Today, they are around 30%, which shows that SanDisk is managing to control production costs better than in the past. The problem is mainly in the high operating costs, and especially in the costs associated with starting up new production lines, the so-called fabs. Investments in these new facilities are necessary, because without them, the company will not be able to meet future demand. However, in the short term, they increase costs and burden profitability. If we now look at the course of the stock, the picture is quite interesting. Today, the stock is trading near $90, recording a significant increase compared to previous lows. Investors seem to be rewarding SanDisk's prospects, especially since the market expects high demand for high-capacity storage media. The stock is moving with positive momentum, but also incorporating many of the positive expectations for the future. This means that current prices have already taken into account the possibility of a recovery, so there is a risk of a correction if the company does not confirm the estimates in the future. Analysts express different opinions. Some describe the stock as a strong buy, estimating that SanDisk will return to profitability in the medium term as new production lines stabilize and demand from the artificial intelligence and data center markets boost sales. Others, however, are more cautious, noting that the fair value of the stock should be lower, closer to $60. This shows that there is a gap between expectations and the current valuation. So here is the crucial question: what is the real outlook for SanDisk? On the one hand, the business environment is particularly favorable. Artificial intelligence, cloud computing, the ongoing digitalization of the economy, and the need to store huge amounts of data are creating a market that is constantly expanding. SanDisk, with its expertise and strong presence in this space, has the opportunity to take advantage of this growth and strengthen its profitability. On the other hand, the reality is that the company is still in an investment phase, with high costs and losses that are putting pressure on its financial picture. Let's not forget the competition. The storage space is dominated by giants such as Samsung, Micron, and Western Digital. All of them invest huge amounts in research and development, and the pressure on prices is constant. SanDisk is therefore called upon not only to improve the efficiency of its own production units, but also to continue to innovate in order to maintain or increase its market share. What does all this mean for the investor? I would say that SanDisk is a high-risk stock with correspondingly high opportunities. Anyone who invests today is essentially betting that the company will manage to convert the current growth in demand into profitability in the coming years. If this is confirmed, the stock has significant room for growth. However, if investments are slow to pay off, or if competition gains ground, then it is possible that we will see significant pressure on its price. In conclusion, SanDisk is a company in transition. Today it is facing losses, but at the same time it has a historic opportunity to take advantage of the enormous growth of the data market and emerge as a protagonist of the next decade. Whether it succeeds will depend on how quickly it manages to improve its profitability and remain competitive in a market that is evolving at a rapid pace. For investors, the bet is clear. This is a highly volatile option that can yield high returns, but is also accompanied by corresponding risks. How do you see the future of SanDisk? Write me your opinion in the comments. Thanks for following our analysis. Stay tuned to Stoxxies to stay informed about the market.